But Caroline was joining us from New York. Caroline, what do you think? What's the most exciting thing here for the consumer and retail this morning?
Hey there, yes, quite a few retailers in focus. I'm sure you already talked about Target, but we're also taking a look at TJX and Macy's. Let's start with the winner though, because TJX actually up about 4% right now after a beat and raise, beat on both the top and bottom line, and upped its full year outlook. Running through those numbers, adjusted EPS of 96 cents, topped analyst expectations by 4 cents per share. Revenue rose almost 6% to $13.47 billion. The estimate was $13.33 billion. Comp store sales were up 4%. That also topped analyst expectations of a 2.8% increase. Breaking it down by segment, Marmaxx was up 5%, Home Goods was up 2%, TJX Canada was up 2%, and then TJX International was up 1%. So growth across the board there. And then in terms of the outlook for the full fiscal year 2025, TJX raised its EPS guidance to a range of $4.09 to $4.13 per share. Previously, that was for $4.03 to $4.09. And then comp store sales are expected to be up approximately 3% for the full year. And then for the third quarter of fiscal 2025, comp store sales are expected to be up 2 to 3%. And then earnings per share expected to be in the range of $1.06 to $1.08. CEO Ernie Herrmann said that the third quarter was off to a strong start already, adding longer term. We're excited about our potential to capture additional market share in all of our geographies and to continue our global growth while delivering great value to more consumers around the world and driving the profitability of TJX. So shares were already higher heading into this report. They're up about 5% today, now up about 27% year to date. So we've learned from this earnings season so far and from the retailers that we're going to be talking about today, it's definitely there's the winners and losers because of a more choiceful consumer, but they still like the treasure hunt and they're still going to TJ Maxx and Home Goods.
Right. It's not like there's a shortage of competition. A lot of businesses trying to go for that, treasure hunter buyer. So Ross up 3.5% along. TJ seems to make some sense. Always forget about Burlington as well, but that's in there. Nordstrom with the rack is down. Nordstrom down this morning a little bit. It never gets. They need to spin off Nordstrom Rack like something. I mean, I guess that wouldn't really work for them, but it's just like because that store to me is like way more enjoyable than TJ Maxx. But I don't know. That could just be me.
To me, they're all overwhelming. I shop the end caps at TJ Maxx, just anything on the ends or maybe shoes and Home Goods, but otherwise it all gets a little crazy. I think same thing for Rack too. And Rack is more expensive, so you don't necessarily feel like you're getting great bargains when you're still spending a lot of money.
Well, it's cheaper than Nordstrom.
Much more expensive than TJ Maxx.
That's where I get my odds.
I know, and I pay full price still online.
Yeah.
But speaking of,
you got to go in. You can't stay on the caps, Caroline. You got to go in. You got to get in the mix. You got to go in the jungle.
Shoes I can handle. It's when all the clothes are on the racks and they're all like it's all too
chaos.
It's all too much. But
it's
I still go. But yeah, the chaos is a little too much for me.
Also, prime spot for cheap kids gifts too. TJ Maxx and Marshalls and stuff. Oh, yeah. Big selection. All right. Let's talk some Macy's here. I mean, we take that, separate it out into its own issue. I mean, $15 is still like reflecting the optimism I feel that's been lingering around Macy's for some time. But was this a fresh reality check this morning?
Well, yeah, I think the fact that it cut its full year outlook as it's dealing with a selective shopper who wants promotions. So it's certainly weighing on shares today. They're off almost, more than 12% right now. It also had a mixed quarter for second quarter results there. Earnings beat, but revenue missed. So adjusted EPS, as you can see, at 53 cents, easily topped analyst expectations of 32 cents per share. Revenue fell almost 4% to $4.94 billion. That actually missed expectations of $5.09 billion. Same-store sales fell 3.3% on an owned plus licensed plus marketplace basis. The namesake Macy's brand was the weakest link. Comp store sales were down 3.6% there. Bloomingdale's comp store sales were down 1.4%. Bluemercury, though, the skincare and makeup business, saw a 2% uptick in comp sales. Inventories overall did rise 6% in the quarter. The company said that was more than they initially had expected. And then in terms of the full year outlook, they cut their sales outlook to what they said to reflect a more discriminating consumer and heightened promotional environment relative to its prior expectations. So now expecting net sales of $22.1 to $22.4 billion. Previously, that was $22.3 to $22.9 billion. And then comp store sales are expected to range between a decrease of about 2% to a decline of about 0.5%. Previously, the forecast was for a decline of 1% to a gain of 1.5%. So not expected to see any growth in comp sales for the full year. Macy said the new outlook range gives the flexibility to address the ongoing uncertainty in the discretionary consumer market. I will say, though, they did maintain their full year adjusted EPS guidance of a range of $2.55 to $2.90 per share. So shares of Macy's were already under pressure heading into this report. They were down more than 10% year to date, but now down 13% following this, these mixed results and then the disappointing cut outlook. So now down 23% year to date.
Okay. Macy's still needs to do something fast, and the closing of the stores, I think validates something I've said like every time we talk about this, which is shut them down, sell them off, figure out how to streamline it in a very extreme way. So adding 5 more closures, I feel like is in the right direction, but still there are some really big real estate properties that probably could. The catch is that with commercial real estate, really, under the microscope and struggling and uncertain, what would Macy's even sell to? You'd have to find a lot of buyers to fill in like 5 floors in some of the main flagship stores. So, and then they don't really have much of an online presence. So then does it just disappear? It's hard to figure out kind of private equity. Take it private, slash it up, dice it up, put it in a blender, and see what comes out the other side. I don't know why this company is still public. It stinks. All right, let's talk JD.
What are you doing here, Oliver? Why aren't you running
Macy's.
Nordstrom and spitting off Rack? Why aren't you running Macy's?
That's right. I'm going to open up my retail private equity. Let's go. Shop till you drop. In this case, Macy's, it's time to drop. How about in China, Caroline? JD and others seem like they're getting, Temu'd.
You love the pun. Yeah, shares of JD.com are sinking on news that Walmart is selling its stake in the Chinese online retailer after an 8-year partnership. Walmart took a 5% stake back in June of 2016, but says it will instead focus on its own offerings there in terms of Walmart China and Sam's Club. So Walmart sold 144.5 million shares for $24.95 a piece. That's according to Bloomberg, raising about $3.6 billion. So JD closed yesterday at around $28.19 a share, just to put that into perspective. But now shares are trading down 7.5% at around $26 per share. Walmart said that the decision allows them to focus on their own China operations. As I said, adding JD has been a valued partner to us over the past 8 years, and we are committed to a continued commercial relationship with them. So shares down about 7.4%. Just to take a look at some of the other competitors, Alibaba shares actually up 1.2% today. PDD Holdings, which is the parent company of Temu that you had mentioned, basically flat right now. And then Walmart shares up about 1% today. Could be in relation to Target earnings as well, but JD definitely getting hit on that news.
Yeah, kind of interesting. I guess after Walmart's big move here, maybe it feels like it doesn't need it. At this point, got what it needed, time to move on. Too much crowding within that market, too much saturation perhaps in the Chinese retail trade. Okay, I could see that. Kind of a surprising shock though. Clearly the market was not prepared for this, and I think maybe just kind of forgot that Walmart was playing a role. So how about last one here on our list, Toll Brothers. Let's talk some housing here. Big expensive homes.
Yes, a luxury home builder. Shares had been under pressure this month heading into this report, but moving to the upside today, up 4% after these results. It was better than expected earnings. They also raised their full year guidance for deliveries and pricing. Adjusted EPS of $3.60, easily topped analyst expectations of $3.28. Revenue was up nearly 2% to $2.73 billion. That was slightly ahead of what analysts were looking for, $2.7 billion. Adjusted gross margins of 28.8% was also better than expected. Net signed contracts rose 11%. Looking ahead, CEO Douglas Yearley said, with mortgage rates at their lowest point in a year and trending lower, favorable demographics, and continued imbalance in the supply and demand for homes for sale, we are optimistic that demand will remain solid through the end of fiscal 2024 and into 2025. So Toll guided for deliveries between 3,275 units and 3,375 units in the fourth quarter. And then for fiscal 2024, they now see deliveries coming in between 10,650 and 10,750. Prior, they had expected 10,400 to 10,800 units. So upping the low end, scaling back the high end by about 50 units there. Toll also expects earnings between $14.50 a share and $14.75 a share. That's up from a previous estimate of 14 cents per share, and also ahead of what Wall Street was looking for, which was around $14.17 per share. So shares in turn up about 5% today, still negative on the month, still down about 2% in August, but up 36% so far this year.
Okay. All right. 5%. What a rip. Home builders are unstoppable right now. $1 million home, no problem. Okay. Cool. Thanks, Caroline. Appreciate it.